Hi, this is Tax CPA Jim Trippon with taxcpahouston.com. Today we're going to be discussing traditional and Roth IRAs. So really, do you know the difference? Traditional IRA accounts, which were created back in 1974, are owned by roughly 33 million U.S. households. Now, Roth IRAs were created much later as part of a tax law in 1997, and those are owned by about 22 million households. And they're both IRAs, but they're very different from each other. And so you need to know the limits and benefits of each. Now, in a traditional IRA, basically when you make a contribution to the account, it's normally a tax-deductible event. And distributions from traditional IRAs are taxed as ordinary income, but if they're taken out before age 59 and a half, they may be subject to a 10% early withdrawal penalty. Under most circumstances, once you reach the age of 72, you're required to take distributions from traditional IRAs, called a required minimum distribution. Additionally, you may continue to contribute to a traditional IRA even past age 70 and a half, as long as you meet the earned income requirement. Now, if you're a single person, the maximum tax-deductible contribution for a traditional IRA starts being reduced once your gross income reaches $65,000. If your income is above $75,000, you're not even eligible for a tax deduction. However, if you file jointly, things are a little more complicated. If either you or your spouse makes an IRA contribution that's covered by a workplace retirement plan, the deduction for making contribution begins to phase out at $104,000 and disappears at $124,000. However, if you don't have a workplace plan and your spouse does, or vice versa, the 2020 limit starts at $196,000 and no deduction is allowed once your total family income reaches $206,000. Also, within certain limits, individuals can make contributions to Roth IRAs with after-tax dollars. So to qualify for a tax-free, penalty-free withdrawal of earnings, you might want to look at the Roth IRA. And in that case, the IRA must be open for at least a 5-year holding requirement, and the owner must be aged at least 59 and a half. Now, just like in a traditional IRA, contributions to a Roth IRA are limited based on your income. For 2019, contributions to a Roth IRA are phased out between $193,000 and $203,000 for married couples filing jointly, or between $122,000 and $137,000 for single filers. Contribution limits apply. So in addition to all those rules, your income will determine if you're even eligible. And workers who cannot put in more than $6,000 a year in a Roth or traditional IRA combined. So if a worker contributed $3,500 to a traditional IRA, their maximum Roth contribution would be $2,500 during that same calendar year. Catch-up contributions. Individuals who reach age 50 or older by the end of the tax year can file for what's called a catch-up contribution. And this allows you to increase the total contribution up to $7,000. So when it comes time to picking an IRA, both a traditional or a Roth, strategy and tax planning may play a significant impact. And if you have any questions about how to do this or what's best for your goals, give us a call. For information on this or more topics, visit us online on taxcpahouston.com.